You open your mailbox and there's a letter from the state. They've decided that 3 guys you've been calling subcontractors are actually employees, and you now owe $47,000 in back payroll taxes, penalties, and workers' comp premiums, plus interest, and they can go back multiple years. This happens constantly in construction. For those of you who don't know, I'm Matthew Grenade, and this is The Business of Building, where we talk about how contractors can run smarter, more profitable businesses. I also work at Dragonfly Insurance. All right, let's talk about 1099s, because this one catches a lot of people off guard. A GC we worked with misclassified 2 laborers as 1099s. Random audit, $27,000 bill. He didn't even do anything shady. He just didn't understand how the IRS thinks. And here's the thing. A lot of contractors fall into this trap for the same handful of reasons. You need labor fast, you don't want to deal with payroll, workers' comp is expensive, and half the guys who show up to the job site ask to be paid as 1099s because they don't want taxes taken out. Plus, everybody knows another contractor who says, oh yeah, I pay everybody as a sub, it's fine. So it feels normal, it feels easier, it feels like the smart way to run your business. But here's the truth. The IRS, your workers' comp carrier, and your state labor department do not care what's easier for you. They care about the actual working relationship, not the paperwork you sign. So let me walk you through how the IRS actually decides if someone is a subcontractor or an employee. And I'll use real construction examples so you can see exactly how this plays out. The IRS looks at 3 big things. First, who controls how the work gets done? If you're setting their hours, telling them the sequence, supervising them every day, training them on your methods, that's an employee. A true subcontractor decides how and when the work gets done. They put their own methods and they don't need daily supervision. If you're babysitting them, they're not a sub. Second, who carries the business risk? If you're providing the truck, the ladders, the tools, the PPE, if you're paying them hourly, if you're reimbursing their expenses, that's an employee. A real subcontractor brings their own tools. They quote jobs by the project, and this part is important. They can make a profit or take a loss. If the job goes fast, they make more. If it goes slow, they eat the cost. Employees don't have that kind of financial risk. Subs do. Third, what does the relationship look like? If someone works only for you, their work is your core business, and the job is open-ended. The IRS thinks that's an employee. A true subcontractor works for multiple clients, has a business entity, and comes in for specific projects with a clear beginning and end. And here's the key point. A 1099 agreement does absolutely nothing if everything else looks like an employee relationship. So let's ground this with real job site examples. You've got a framing crew member who shows up at 7 a.m. when you tell him, uses your tools, works on every job, gets paid every Friday, was trained your way, and has no other clients. That's an employee, no debate. But let's say you hire an HVAC contractor and they quote you $8,500 for a full install, bring their own crew and van, work for 5 other GCs, and you just give them specs and a deadline. That's a subcontractor. Same with the grading contractors, electricians, plumbers, real trades running real businesses. Where contractors get hammered is the gray zone. Helpers, laborers, one-man subs who only work for you. Let me give you the classic example. A drywall finisher works only for you for 8 months, shows up when you tell him, uses your scaffolding, gets paid $300 a day every Friday, has no business entity and no other clients. You might call him a subcontractor, but the IRS calls him an employee. And we saw that exact setup get reclassified during an audit. The contractor owed $8,400 for just one worker. Multiply that by 3 or 4 people and it gets ugly fast. So how do you keep yourself out of trouble? Real subcontractors look like real businesses. They bring their own tools, they invoice you, they work for other contractors, they carry general liability insurance, provide workers' comp, or they have a valid exemption from the state if they're a sole proprietor. They decide how the work gets done. If your foreman is texting someone every morning with today's task list, that's not subcontracting, that's supervising. And the IRS will see it that way too. And if you need someone full-time, exclusively under your direction, just make them an employee. It's cheaper than the audit. Now, here's the part most contractors never think about. Your insurance company will punish misclassification even faster than the IRS. At the end of the year, your workers' comp carrier audits your books. If your subcontractors don't have their own workers' comp, they treat them as your employee, and you get the bill. We saw a framer who paid $180,000 to 3 subs. Audit bill came back, $31,000. Gone. And then there's the general liability nightmare. This one scares me the most. If your sub gets hurt, workers' comp may deny it because you said he was a contractor. GL may deny it because they say he actually looks like your employee. We had a concrete contractor in that exact trap. Guy broke his leg, workers' comp denied, GL denied. The contractor paid $68,000 in medical bills out of pocket. That's the danger zone. All right, let me give you a quick decision test you can screenshot. Do you control their daily schedule? Employee. Do you pay them hourly or weekly? Employee. Do they work only for you? Employee. Do you provide most of their tool or equipment? Employee. Do they have a business entity and their own insurance? If not, employee. If you're checking more employee boxes than contractor boxes, the IRS will too. Here's your one action step this week. Pull your 1099 list from last year. Look at each person and ask, if the IRS audited me today, would they agree this person is a contractor? If the answer is no, fix it now, because when the IRS makes the call, you're already writing the check. If this was helpful, hit the like button so more contractors can see it. Subscribe to the Business of Building. We do videos every week to help you run a stronger company. And if you want all the details, go read the full blog at www.dragonflyinsurance.com. Thanks for watching. I'll see you next week.